Thank you all for being here today. We are in our, I think, 9th week of our weekly Atlanta real estate update during the COVID-19 days. And today we have some special people with us, so I want to introduce them all. So I am Katie Shank with Keller Williams Realty Atlanta Midtown. And then we've got my sidekick and business partner and buyer's agent, Robby King. And we also have Jonathan Minsk, loan officer extraordinaire with Ameris Bank. And then today's special guest is Rob Enfinger, and he's with Allstate.
Hello, everyone.
Thank you. So hello to everybody. And we have a few guests on the Zoom, and now we're on Facebook Live, so y'all can connect there too. And if you have any questions during this whole hour, feel free to make comments either in our chat box on the Zoom, or if you're on Facebook, you can make comments in the watch party, and we'll get to your questions or comments or questions as we go along. So we usually like to start off with talking about the previous week, since we do these weekly. And so I'm going to let Robby talk about the stats and what's gone on in Atlanta real estate in the last week.
Thank you, Katie. So yeah, as usual, we're looking at real estate transactions that took place since our last call. And these are all within the perimeter. So it's anything that's in Atlanta or Decatur or East Point or College Park, any of the cities and towns that are inside the perimeter. So the average sales price in the last week was almost $444,000, with a median days of being active on the market of 14. So that's great. That's just 2 weeks between listing and going under contract. Again, we have 3.8 months of available inventory. So that's equal to what we had last year at this time, which indicates a very strong seller's market. For that average sales price, the median sales to list price ratio in the last week was 98.33%. Listings, we've had 449 new listings come to market and 2 coming soon. 105 contracts went pending. 91 sales closed. And right now we have a total active of 4,538 listings. So pretty steady from what we've seen in the last several weeks. One thing that I noticed that went down a little bit, I think, was the number of days on market. Those that closed in the last week, it seems like we were around a month maybe, and it seems like that number has gone down a little bit. So I think what is happening is that more buyers are starting to actively look and go under contract. I know we've seen there was kind of a dip because of COVID and the number of people who were looking, and now it's starting to climb back up pretty rapidly. So those are my stats of the week.
Great. Yes, absolutely. I mean, everything you said, and we can speak to personal experience with 2 things. One, the days on market. You know, the second something is listed right now, if it is in town, priced well, in a good location, you know, even if it needs a few things, has a few issues, if you will, it's still moving very quickly. And there's usually people lined up to see the house. And then as far as people coming out more, you know, Robby can definitely speak to this, that we've got a new batch, a handful of new buyers that have come up literally kind of overnight, you know, in the last week, I'd say, that are active, are having meetings with us, buyer engagement, and then going out, getting approved, and also going and seeing properties. So we just went binding on another one last week, which is great. So people are out there. It's just, it's a really good time to both buy and sell, which is a unique kind of situation that we're in, but that's where we are. So part of the reason of that, such a good time, is because interest rates are so good. So Jonathan Minsk with Ameris will talk a little bit about what they're doing and any other mortgage updates or anything you want to share with us from the last week or so.
Thanks, Katie. So as I have said week after week and stressed that, you know, we are at all-time historical low interest rates. So, you know, ranging anywhere from 3 to 3.25 is on average. And, when I say there's a range, it's because interest rates are based on risk-based pricing. So there are adjustments based on such things as credit score, loan to value, property type, occupancy type, et cetera. But, the fact that you can get a mortgage between 3 and 3.25 is just crazy. And I know there, people still ask this question to me, with the interest rates dropping to 0%, that has nothing to do with mortgages. Those are short-term interest rates, and those really apply to things like credit cards and so forth. So, but to get a mortgage for 30 years at 3 or 3.25 is insane. And so as a result of that, business is really brisk, and it's a good combination of not only refinances, but also purchase business. And I would say that my personal business is probably 60% purchase and 40% refinance right now. And as Katie just mentioned, that I think people are starting to come out of their homes now and are really starting to feel a little bit more secure. And as a result of which, I'm seeing more people contact me to get pre-qualified. And as we know in this market that we're in, that once you actively start looking for a property, you're looking, probably you'll find something in within 2 weeks, and you'll close within 30 days after that. So I think that now that people are starting to go back to work, to get out of the house, I think we're going to see that there's going to be more people that are willing to list their homes, and there's going to be more people going out there and looking for homes. And I think that the market that we normally see in March and April is going to come 2 or 3 months later this season. But and I think it's almost here, it's going to be crazy. And the good thing is that I don't foresee, and all economists, would agree that right now they just think that interest rates are going to stay as low as they are, and who knows, they even potentially could go lower. So now's a great time to definitely take advantage of those interest rates, whether it's to purchase a brand new home, whether it's to refinance, whether it's to sell and move up, downsize and move down, whatever your situation may be. Now's an excellent time to do that. And then one last thing I wanted to talk about is and something Katie asked me to mention too, is about forbearances. That's getting a lot of press right now. And what a forbearance is if you have a mortgage, and let's just say you lose your due to COVID-19 related issues. So you may be in a service industry. You may work for a company that just laid off 50% of its workforce, and you have a mortgage, and or you may have just simply been furloughed or have a pay cut, and you're having a hard time making your mortgage. Lenders are offering what is called a forbearance, and a forbearance is very different than a modification. A modification is a permanent reduction in an interest rate, whereas a forbearance is just a temporary halt on having to make a mortgage payment. So what most lenders are doing is basically saying, for 90 days, you don't have to make a mortgage payment, and we're not going to report you late for not making a mortgage payment, but we're also not going to forgive the interest that accrues during those 90 days. So it would be added on to the back end of the mortgage, so that they can resume making their mortgage payments, once they're back to work or once they find a new job, and it does not affect their credit. One thing that we're starting to see now is that people want to try to refinance, or buy something else while they're in forbearance, and you can't do that. If you are in forbearance, again, it's not going to be denoted negatively on your credit report, but it is going to be on your credit report that your current mortgage is in forbearance, and you just need to hang tight, resume, your financial situation. And once you're out of forbearance, then you can pursue either buying a new property or refinancing your existing property. So that's what I have for this week. And now I'll pass it over to Rob.
Oh, I think Rob might be muted. Katie, are you able to unmute him?
I'm so sorry. I had everybody muted. Let me unmute you.
I'm unmuted.
Financial situation.
Hey, Rob. Thanks so much. Why don't you tell us a little bit about what you do and what's gone on differently in your business in the last
Sure.
month?
That's what I have for this week.
Oops.
And now I'll pass it over to Rob.
And the road from go through. Hi, everyone. Rob Enfinger, Allstate Insurance, Indicator, Georgia. Katie and Robby, thank you so much for having me. I do appreciate the opportunity. Insurance in Georgia is pretty crazy right now.
I'm unmuted.
Financial situation.
Hey, Rob, thanks so much. Why don't you tell us a little bit about what you do?
Can you guys hear what I'm hearing in the background, or is that just me?
Sure. Yeah, I'm so sorry. I need to mute. Somehow the Facebook is doing a reverb.
Hi, everyone. Rob Enfinger, Allstate Insurance, Indicator, Georgia. Katie and Robby, thank you so much for having me. I do appreciate it.
Obviously, we're live.
No one wants to hear me live, much less twice. Right now. I'm unmuted.
Hey, Rob.
You know what, Rob? It might help. I don't know if you can use your computer, but not Zoom. That might help.
Let me try that. Okay, I think it's done. There we go. So, again, hello everyone. Rob Enfinger, Allstate Insurance, Decatur, Georgia. Home insurance is alive and well in Georgia right now. It's super crazy. During normal times, no one wants to talk about insurance. Let's just face it. Right now, everybody's got a little more time on their hands, and in some cases, really looking to save money where they can on different items. One of that being home insurance. As everyone and Jonathan spoke about, there's a lot of refis going on right now. One of those levers to pull with the refis these days is with homeowners insurance. That can be a fairly significant portion of the premium. So again, a lot of people are using those levers to try to reduce those premiums, hence reducing their mortgage payments. Also, we're super busy these days with people that are getting in the home market for the first time, upsizing, downsizing, etc. So fortunately with Allstate right now, the rates are awfully good right now. So we're in a good position to help folks out and be sure they're in good shape. COVID-19's changed a few things for us from a process and payment standpoint. Most of the policies we have today for a home insurance, we would send somebody out to actually see the home. As we wrote a new policy, these days we're doing a lot of these inspections either virtual, or in some cases we're actually sending drones out to take a look at the house. The good news is we're not stalling any closings on homes because of insurance matters. So we've been able to help our clients and our mortgage folks and our real estate folks with that. The other thing we've been able to do as of late is we've instituted some special payment plans for customers that just can't make ends meet. We're deferring auto payments, home insurance payments for up to 60, in some cases 90 days, just so folks can breathe. So I'm proud of the company and the things we've done around that. A couple things to look out for as folks are looking for insurance is just honestly be sure, like with Katie and Jonathan and Robby, be sure you're working with folks that know what they're doing. Insurance can be interesting. You need to have an agent that knows what they're writing, knows where they're writing. The people someone that wrote a home for a new build in Alpharetta is going to be much different from writing a 50, 75, or 100-year-old home in Grant Park. Different coverages are surely needed, from water backup coverage to building codes coverage. So you just need to be sure you're working with someone that knows those things. Customer has a pool. Someone needs to ask questions about, you got to have an umbrella policy if you got a pool. So just be sure you're connecting yourself with, yes, I know someone that has one of those. Just be sure you're connecting yourself with someone that knows exactly what they're doing with those. Also in town, in some cases, the land that the house is sitting on is worth more than the house itself. You want to be sure that the insurance is only covering what it would cost to rebuild that house and not the purchase price, because the insurance company is not going to replace the dirt. No matter how much you beg and plead, it's just not going to happen. And the last thing, if you've got customers that are buying homes in flood zones, we help a lot of clients with flood insurance, and flood insurance can be 2 or 3 times the annual premium than could be the actual home insurance. So be sure that whoever you're working with, they know what they're doing, because you can really get upside down and knock yourself out of a loan based on a flood insurance premium that is 2 or 3 times the what your homeowner's insurance piece is. The last thing is if you're working with, if you're buying a condo, just ask a lot of questions around condo insurance and who's responsible for what if there's a loss. HOAs are obviously involved. There's a lot of HOA input. If there's a loss, normally a condo policy would cover interior walls in. The HOA would cover exterior, etc. Where people really get themselves in trouble with condo insurance is, in a lot of cases, if it's a loss that the HOA is going to cover, there is a deductible that the master policy has, then in many cases, the homeowner has to pay. This is outside of their own policy. We have clients where the HOA deductible is $50,000. No one wants a $50,000 surprise that they've got to pay for before the HOA does the work. Insurance companies, for the most part, will offer riders that will cover those deductibles for you, but just ask lots of questions. Because again, you just don't want to get sideways on those, because you surely can. You know, in the end, really, insurance can be confusing. You don't know what you don't. If you don't know what questions there are, you just don't know what to ask. So just in the end, just be sure you're working with folks that know what they're doing and know how to write it, know what you're writing, and what really the key risks are out there.
Absolutely. Sorry, I'm so sorry for the technical issues earlier.
No.
I'm back and I'm here and I heard, I think, the majority of what you talked about, so thank you. But we may have some questions for you. I think
Sure.
I do, because I might have missed a little bit.
I
But,
actually have two questions.
okay, go ahead, Jonathan.
Okay, my first question is, Rob, I do a lot of, or a fair amount of new construction in the in-town market.
Mm-hmm.
A lot of them are fee simple townhomes.
Mm-hmm.
What I'm seeing more and more is that the developer is basically issuing instead of issuing, you know, a typical HO6 policy, I'm sorry, an HO3 policy, they're issuing an HO6, where basically they're okay, let me back up. More condos, that was what I'm finding, is that the developers are extending the amount of coverage in which they're offering the buyers. So all they have to get is an HO6 policy as opposed to an HO3 policy.
Mm-hmm. Mm-hmm.
And so first of all, are you seeing more of that? And, you know, I try to educate my buyer to understand the difference between the two. You know, obviously if you're buying a fee simple town with the land that the property is owned,
Mm-hmm.
sits on, and you own the interior and exterior walls and the airspace, you want to insure it accordingly. But a lot of these developers are deciding to kick in and only, only require them to get an HO6 policy, which is about half the price from what I'm seeing. I'm seeing a lot more developers do that now. And then I have a second question once you answer that.
Yeah. So it's really all over the board, Jonathan. I'm seeing some cases where they're doing just that. Yes. Where they're offering more coverages. In those cases, it would be a basic condo policy. And you're right. Those can be maybe not half, but close to half of what a homeowner's policy would be. But what I've been finding lately with some of these new builds is there's a huge gray area as into who's responsible for what. We usually tend to ask our clients, send us a copy of the bylaws, we can look at it and see the insurance requirements, etc. Some of those are even vague. So what we've advised our clients for, if you just don't know and you're trying to get in, you don't know what you're responsible for, you're better off to minimize risk by taking out a homeowner's policy. It may cost you more, but it may be $200 more a year, right? So it's not a big difference. But at this point, I would rather our customers for $200 be overcovered than undercovered until you get through the gray area and find out exactly what's covered and who's responsible for what.
Thank you. So my follow-up question to that would be, so in the event that there is, you know, a claim, and you've got, let's just say that you did go ahead and you got, you know, an HO3 policy. So you've got for the structure through your own insurance, and then also it's covered through the HOA. how do you go about making a claim when something like that happens? Do they contact you and then you contact the HOA's insurance company and figure out who's
Exactly. So our clients will contact me, who will contact our claims group, go through the process. Then our claims team will actually get to the homeowners association's master policy holder, and then they really flush through who's responsible for what. So again, in this case, if you've got not double the coverage, but if you've got 50% more coverage, then I would rather have that than the other, because some of these losses can be massive. I mean, if you got a water loss in a condo, you may not have, it may not be your fault at all, but water's a bad thing when it comes to insurance. And it can cost thousands and thousands and thousands of dollars.
Thank you.
Mm-hmm.
Yes, water is like always the number one scariest thing, I think.
Water's bad. Water is bad.
That was a really good question. And I like that you spoke specifically to townhomes and condos, because we sell quite a bit of those. And obviously Jonathan is also an expert in the financing for those, because it's a whole different animal, when you're getting a loan for that, and then ultimately when you're getting insurance for that. So it is good to know the differences, and to work with, like you said, someone who really knows what they're doing, because there's a lot of insurance people out there that don't know the difference, that don't work.
And it's interesting, we'll have some cases where I'll ask the client, okay, is it a condo or a home? They don't know who's responsible for what. So I say, well, contact your person, contact your agent, or contact the person that you're contacting the association. They have no idea what you're talking about.
Yeah.
They just don't. So we usually try to take it into our own hands at that point, get a copy of the bylaws, take the time to go through it to find out truly who's responsible for what. And if it's still gray, we overcover them until we get through closing, and we can always rewrite the policy and get them in something that fits.
Yeah. No, that's great to know. I actually haven't heard that before, just moving forward with it and then having to rewrite it. I guess some of that has to do with timing. If people are trying to do a kind of a quick closing, or even
Absolutely.
a 30-day. So that's good, because sometimes in the olden days, even, like, sometimes insurance is what would hold people up, and oftentimes it was the last thing that somebody thought about. But I know Jonathan, well, sometimes it is, but Jonathan as a lender is really great to speak about it the first time they talk, so that they can get on that right away. Because nobody wants to be waiting for insurance the day before closing,
I'll just speak from how I do business, and I push hard from day one. When I send out my loan disclosures, then go ahead and contact an insurance agent and get your insurance taken care of now.
Sure.
Somebody, every insurance company is different, and some may have issues if a roof is more than 5 years old, and there's all kind. I don't have to tell you this, Rob, but things that can happen at the last minute, which you try to avoid. Plus, as far as the closing disclosure, we have to have the insurance, at least a quote from the insurance, the initial CD. So it's important for them to do it more on the beginning of the cycle than the end. So I really push hard to get that insurance back.
That's great. And again, if you throw flood insurance in there, if that's required, that will absolutely turn things upside down if you're not careful.
Oh yeah.
It
for
can
sure.
We can do a quote for someone, and that initial quote can be $500 a year versus $4,500 a year.
Yeah.
And until you get an elevation certificate that actually gets a hard number based on the dynamics of the home, you don't know. And $4,000 can throw someone out of qualifying for a loan. So
absolutely.
So the earlier the better, to your point, Jonathan. Yeah.
Absolutely. One of the first things that we do is when I turn in a file, we order the title, we order the appraisal, and we order the flood cert. Those are all the first things that happen. As long as it comes back as not being in a floodplain or flood zone, notified. If it does come back, I notify, but usually that's within 24 hours of turning in the file. So then I have to, notify the borrower, hey, you need to get a flood insurance quote. And most of the times, if a property is in a flood plain, they have an idea of it. But sometimes it does take them by surprise, and it can make a difference, of them buying the house and not, when they see what that premium is.
Yeah. And on the flip side, Robbie and Katie, one of the things we have found out is that in some cases, because the flood maps are being reviewed more often now than in the past, if you've got a house that's been on the market for 6 months, right, and you've been marketing it as a product that is in a flood zone, if it at that point for some reason is changed and is not in a flood zone, if you're marketing it as flood, you know, that's a whole different marketing dynamic for you. So it is really good as you start to get close to consistently check with your buyers or with your insurance folks to be sure that, okay, I think we're getting pretty close on this. Give me one more look at the flood zone, just because I just don't want it to change. And now I've got to change my tactics.
Yeah.
Well, I've seen it happen the other way too, where it's the flood zone was maybe close to the property and not encompassing the property, and it did change, and now the property is included in the flood zone. So
yeah, we get lots of those now. We get probably one a week where a client did not have, they've been in the home for 30 years. The home was not in the flood zone. Now they've got the back corner of the lot that's in the flood zone, and the lender is saying, all right, you need flood insurance.
right.
So it's good to be, good to get ahead of that.
Yeah, definitely. Yeah, those are some great points. I was going to say, Richard's on the Zoom with us, so I didn't want to ignore him. It looks like he's making dinner, but Richard,
I'm listening.
I unmuted you just to see if you have any questions for Rob or for anybody on the call right now. I want to give you.
Well, Rob, I actually did have a question for you that I'm just trying to get a little bit of clarification on. I don't really understand the difference between homeowners insurance and hazard insurance. Was kind of hoping you could be able to break that down for me.
It's the same.
Same thing?
Yeah, they would just call it hazard insurance. The biggest difference, and Jonathan mentioned, is really an HO3 versus an HO6.
Okay.
Being a condo policy or a home policy. Now, no, some places will be titled as a townhouse. That townhouse could be an HO6 or an HO3. So you're not going to know until you dig into the bylaws.
Thank you.
Yeah. Okay. Did that answer your question? Because I know Richard is actually under contract, and he and his lovely wife are buying a single family home. So I just want to make sure that answered your question. So.
Awesome.
It did. Thank you.
Awesome. Good. Cool. Did anybody else have any other questions for Rob right now?
I don't think so, but I could say that it's probably worth mentioning that I transferred all of my insurance policies over to Rob in the last few months, and it's been a terrific experience. And I feel like I've, gotten much better coverage at a better rate. I think I'm probably paying maybe similar, but now I've got much bigger coverage, and I have lived in this house for 9 years, and I do, there's a pool in the backyard. I didn't have umbrella coverage. There's just lots of really helpful insight that Rob provided that I hadn't really thought about, or maybe had and just hadn't, really thought it through. And anyway, it's been a great experience, so I appreciate it. Thanks, Rob.
Thank you. Thank you.
That's awesome. That's an amazing testimonial. So hopefully people out there in the Facebook world will hear that too. And Rob is a preferred lender in our office too. So many people in our office have worked with him and referred him. So again, we like to have the best people on our calls and vendors. So if anybody in Facebook world has any questions for Rob, feel free to put them in one of our lives. We've got multiple watch parties going on, I think, between the three of us. And if Rob, if you want to share it too, you can. So then what else we're going to talk about today? Anybody else have any other thoughts or questions on anything we've already gone over? Rob, did you have any questions to us as Robby and I working with the sellers and the buyers that we've been working with, over the last 9 weeks?
Yeah, I mean, I would guess the biggest thing would be really with Jonathan is, do you see with rates, and I believe you said that, but just to confirm, going to be fairly steady for a while now?
I believe so. Certainly through the election and most likely through the end of the year. I think it's important for our leadership to really keep interest rates low and to stimulate the housing market, because that drives so many other factors in the economy that I really do believe that we're going to see interest rates stay, in the 3.25%, 3.5%. So
my other question is how does forbearance impact someone's credit score?
It doesn't. So as
Good.
mentioned earlier, you know, forbearance is basically not, it's short term, and it's helping somebody who's in a financial position to take a kind of like what you guys are doing with your premiums, giving them a reprieve for a few months. We're not forgiving the interest that accrues during those months. We're just allowing them not to make a mortgage payment and not affect their credit. So,
Good.
you know, obviously it's got, you know, you've got to document that there's a reason for not being able to make their payments, not just because they don't want to make them and they figure, hey, you know, I'll stick that money in the bank, but it's more, you know, out of a necessity. We want people to stay in their homes. You know, we want them to feed their families first. And then when they get back to work, then what happens is those payments that they missed are sort of added to the back end of the loan, so that they will, you know, let's just say they sell their house a year from now, that accrued will be paid, you know, added to the payoff. So they'll ultimately pay that interest back, but we're just helping them, you know, get through today and tomorrow.
Katie and Robby, do you guys see a lot of home people from, is flooding homes been in a flood zone? Are they really, do you see that as a deterrent? Are people more open to that these days, or no?
Man.
Personally,
I was going to say personally, yeah.
it is a deterrent from where I'm sitting.
Yeah.
And I live in a really fantastic neighborhood that does have, it's an older neighborhood, and it's quite large. It's like 450 homes, but there is, you know, South Peachtree Creek or whatever going through it. And there is kind of a big flood zone in that neighborhood. And I've definitely shown homes in the neighborhood that were great houses, and who purportedly had never had issues with flooding and are definitely not new construction, but they're in that flood zone. And so it does give people pause, because it's just an extra expense. It's extra insurance that they have to have.
Yeah.
So from where I'm sitting, yeah, you know, it's definitely a deterrent for some people.
And I'll jump in and say something too, just from my perspective. So it's really rare that I will come across a situation where a property is in a flood zone and the home buyer has no idea. If the house is marketed properly, it should be.
Well,
Yeah.
I happened to this week where we were about to get in the car to go look at something, and I said, y'all know this is in a flood zone? And they said, no. Where's that supposed to be in the FMLS listing? I said, it's supposed to be right here, and it's not. But I looked, and it is.
Okay.
We went, thanks for telling us. We're not going to go.
Right.
Yeah.
But, you know, I mean, assuming that somebody does know in advance that the property's in a flood zone and they're willing to go look at the property, I think that typically if that's the house of their dreams, that's not going to kill the deal. But what will kill a deal if you're not expecting that premium, you know, and all of a sudden you've got this gigantic premium that you weren't expecting added to your mortgage to your mortgage payment, you're going to take a step back and really think hard about it. So I think.
Right. And it needs to be priced accordingly, I think, because when I'm looking at, you know, when I'm looking at the pricing, I'm like, you know, I know, like in certain neighborhoods, I'm like, I know what this house will go for. I know what it's supposed to be priced at. And I know that, you know, people are getting like 98% of asking price or whatever for homes typically. But I also know that in this flood zone, they should be priced. It's going to be a little bit different. It should be, if they want to sell.
Yeah.
Because they need to take it into consideration that people are going to maybe, if they want to be in that neighborhood, then maybe they'll face that and get their flood insurance and get their protection and that sort of thing. It just has to be priced right.
Yeah. And here's a kicker in some of the more higher end neighborhoods is FEMA limits coverage on flood insurance to $250,000. So if you bought a home where the cost to rebuild is $400,000, you're going to have a gap in coverage.
Big gap.
Big, yeah. So as you know, as a primarily listing agent now too, I would say that this is something that I do discuss with people when I meet with them, you know, initially, or talk to them initially about selling their home, because I have a lot of familiarity about specific neighborhoods and areas that are like known to be in flood zones.
Mhm.
So if I'm not 100% sure and I haven't already checked the tax records or tried to figure it out on my own, I certainly talk to them about it. And if somebody doesn't know, like you say, I mean, it's a mystery, that's kind of questionable depending on how long they've been there. Because, you know, do they have home insurance? I hope. So it's rare that we get in
Yeah.
those situations, but it's definitely something that a good listing agent will discuss up front, and will price accordingly, and will also share, you know, in their comments and the details and the listing. So it's not a surprise to anybody. So the people that are coming to look at the home are aware and they're prepared, you know, hopefully financially and otherwise to live in a home like that. So, you know, it's a lot of the upfront work and a lot of the stuff as a listing agent that hopefully it will benefit you by the time the buyer comes to make the offer and talk to the insurance person. You know, we like to limit surprises on that end
Yep.
as much as possible. Which brings me to something else I was going to mention. You know, there's been a lot of great news articles. There's been a million news articles over the last 9 weeks, but this past 2 weeks, there's been some really good ones regarding the market and where we are and how buyers and sellers are starting to really come out and physically, literally coming out of their homes and moving now. And we're seeing that a lot too with our business and our referrals that we're getting. So like as we speak, we've got, I know of 3 people that are getting ready to list their home, I hope in the next month or so, depending on the timing, that are all getting their homes pre-inspected. So not only is the flood, you know, insurance a question, it's like what else is going on in your home that you might need to address that's going to come up later when the buyer does their inspection. So just this week, we've got someone doing one tomorrow on Friday. We've got one next week. I know someone else scheduling. So I think this is a big thing that I am really trying to promote with all the sellers and all the time, but especially now, if anybody's got any, you know, weariness about what they're doing, you know, as much as you can do up front to get the home ready and in good condition, or at least to share what you know about the home up front, is going to really help people, buyers coming in, knowing what to expect, that they have to take care of, or just knowing the history of the home. You know, say that somebody has lived in, sometimes people live in homes, they have no idea how old their AC unit is, or how old their water heater is, or how old the roof is. I mean, they just don't even know. So having a home inspection, a pre-inspection, can really enlighten them and at least give them the information, if not, you know, give them a list of what to do, you know, fixes to get their home ready to put on the market. And I know Robby, you know, can speak to really appreciating that. I think as a buyer's agent, you know, to go into a home that's been pre-inspected and if not repaired already, at least be aware of what they're walking into is, I think, priceless at this point, especially when he's sitting there negotiating, you know, an inspection amendment, you know, on a home that didn't have that done. So this is something that usually will surprise sellers when I talk to them about it in a listing presentation, but I hope it's something that also elevates like our service level and our vendors that we work with that try to really put this out. This is a service that they offer, and that this is something that we really promote to have the best listings as well. So again, maybe Robby can speak to what he thinks about homes he's shown that have been pre-inspected versus not.
Well, amen to every single thing that you just said, but
hallelujah.
it's like homes are complicated things. Like it's a complicated structure. There's lots going on. You are living in it comfortably most of the time, and you just don't pay attention to what's going on, like in your crawl space or whatever, your attic. You don't care because you don't go there. It makes every bit of sense in the world, and it's worth every dollar you would spend to have a pre-inspection. You want to know what you're selling, don't you? Like if you are selling your house, like you want to know what's going on. I mean, you're not really trying to, you shouldn't be trying to put it on the market and then have someone else come and tell you what's going on with the house that you've lived in for 8 years. It's really a brilliant thing, and not a ton of people do it, but I think it's a great idea because nobody likes surprises. Buyers don't, sellers don't. Nobody, you know, if you're trying to facilitate, and everybody is, a smooth transaction and something that feels good because you're selling because you're moving and you're excited about it, or you're buying and you're excited about this house because you love it. You know, it's just that thing that you can do to make it an enjoyable experience, which is what Katie and I always want for our clients, no matter what, is like the best experience we can give them. So,
I have a question based on something you just said. So do a pre-inspection on a home that you're thinking about putting on the market. And this is probably a question more for Katie.
Mhm.
Get the inspection report back, and obviously there's some big ticket items, and then there's obviously some smaller issues.
Mhm.
Recommend that somebody's getting ready to list their house, fix the big ticket item, or see if that's something that comes up in the inspection, that the potential, home buyer does, and see if it comes up and something they ask for. Like, what is your stance on that? I'm just curious.
So it really depends. It depends on, what it is, one, obviously, most importantly, and two, where the seller is financially. So for instance, not long ago, I went on an appointment with someone who was well aware that she had some serious problems with her roof and she needed a new roof. She even had a leak. I mean, it was just very clear that this needed to be addressed immediately. And she, at the time, maybe wasn't in the best position to go ahead and get the new roof. So in that instance, if she doesn't go ahead and do that right away, obviously that's something that's like reflected within the listing and again, the pricing. Because if it's an immediate need and a major issue, for instance, a roof leak or, water coming in your home is obviously the worst thing. We talked about this earlier. That's like a crucial kind of situation that I obviously would highly recommend taking care of. But if not, we have to go ahead and reflect it in the price. But oftentimes it is like a bunch of, small things like you mentioned. I would say anything that's significant. For instance, another thing that could be very significant would be something like mold, or just something that is completely broken, like literally like your dishwasher doesn't work. I mean, some major things that people consider pretty basic. I always, try to they have the pre-inspection, they share it with me. And then we have a meeting we try to prioritize, just like Robby does with his buyers, what is the most important thing here? What's the most immediate issue? Is it an active problem, or is it something that can be, something that is just small that comes up in any inspection and it's not as crucial, So we just have to kind of go through and prioritize what should be addressed first or immediately, and then also look at their finances with that. Obviously, if somebody can't afford to take care of it, then that's something that we have to reflect. Or oftentimes it's nice too. We had Lori King on last week with First American Home Warranty. Another thing I love to suggest to sellers is to go ahead and put a home warranty on the home as soon as they list it. So they have seller coverage, and then they're buying the home warranty for the buyer when they close. So they have a 1-year home warranty. Say, for instance, if everything's working great, but all the systems are 10, 15, 20 years old, that at some point something's going to break. So by having the home warranty there, it's kind of a little bit of an insurance, if you will, to use Rob's, name, that, will make them feel a little bit better having the home warranty the first year on the property, and it's something they can renew. So again, it just depends on what it is and the situation with the current homeowner. Right now there's a mixed bag. I mean, most people we work with and are talking to are good financial state, and many of them are moving up, if you will, or moving to a different city or different area to relocate for different jobs and things. But if anybody is in a situation where it's the opposite and they've got to sell for financial reasons, we can run into these scenarios where they may not be able to fix everything right away. So we just have to reflect, the pricing in that. So.
Yeah, I think if I can add one more thing, I think one of the things to be cognizant of, and in the spirit of getting the insurance involved early, is when it's tied to roofs, just because the inspector said the roof is good, insurance companies, regardless of brand, are notorious about being really tough on roofs. So we have them all the time where the customer will say, but my inspector said the roof was fine. Well, just because it's not leaking today doesn't mean it's a bad roof. So the sooner you can get, at least if it's a home where it's a marginal roof and the inspector says it's fine, and you're saying, I can't believe the inspector said the roof is fine, I would get your insurance folks involved early, because what you don't want to do, and I've had this happen where the roof passed fine through the inspector. Well, the guy couldn't get insurance on it from anyone because it was an awful roof. So at the end of the day, it held up closing because no one wanted to pay for this new roof, and it had to have a roof to get insurance on. So anytime those things are marginal, get the insurance folks involved early, because you want to be able to market and or price position yourself correctly, whatever the side of the fence you're on.
Mhm. That's a great point, because I didn't think about that aspect of not even being able to be insured. I mean, that's very
Yeah.
serious. I mean, I know Robby actually had a situation where, yes, somebody was saying their roof maybe wasn't as in good shape that it was. So I have a question about that, Rob. So there's a home inspector, of course, but then there's a roof inspector. Do you require that a roofing professional comes out to give an inspection versus, to get the right information?
So ours is just a general independent inspector. So they don't necessarily specialize in roofs, but if they, they'll check for all hazards in the house. So they're all trained to be the roof expert as well, but that's not their sole purpose. Theirs is really to look for hazards, do spaces. They look for granular losses, anything like that. And again, what can look like a great roof or an okay roof from an inspection process from the inspector can just not be good from an insurance perspective. And most companies, ex the COVID situation, they're going out to inspect the roofs. And if they're not great roofs, they're not insuring the property.
Yeah. Well,
Can I chime in something too? Because this does happen occasionally where, where a situation comes in where, a new roof is required and the seller doesn't want to pay for it because what if the buyer doesn't buy it? And the buyer doesn't pay for it because what if something happens and he doesn't close on the house? So we have something that's called an escrow holdback. And I don't know if you're familiar with what that is, but essentially we'll take whatever the cost of the repair is, and let's just say it's a roof, and let's just say it's $5,000. We'll take 1.5 times the cost of the repair, and we'll put it in escrow held by the closing attorney, and we'll close with it as is. And then what happens is after closing, they have a allotted amount of time to make that repair, and both parties have to sign off on it saying they're satisfied with the work done. Then we'll release the check to the vendor, and the other 50% goes back to whoever put that money up, whether it's the buyer or the seller. Let me ask you a question, Rob. If you were insuring a roof like that, would you guys be able to close as long as you know that the money was being held in escrow to repair the roof after closing?
Yes, yes. So the one caveat to that is there's got to be an end date and there's got to be an expected completion date.
Absolutely. And we're the same way, where before the escrow agreement is put into place, we have not only obviously the proposal from the contractor, but we have everybody sign off as to when the work has to be completed. Yeah. With like a roof, 2 weeks is a reasonable period of time.
Yep. We usually give them 30, 45 days to make repairs based on any failed inspection issues.
Right.
But yes, that will work, Jonathan.
Okay, great. Good to know.
That's very helpful information. I'm sorry. I was trying to mute myself so I didn't interfere with the Facebook. I think it's, oh, hi. Hey, Ashley, how are you? Someone else joined our Zoom. It looks like Richard's been cooking away. So anyway, I know Richard's been listening, and maybe Ashley was listening from afar, but Ashley, do you have any questions for us? We're just kind of going over any questions anybody has right now. Oh, are you muted? Let me unmute. I unmuted you. There we go. Yes, sorry.
So Rob actually did answer one question that we had earlier about the difference between homeowners insurance and hazard insurance.
Oh, yeah.
Same thing.
Good to know.
Killed it. Appreciate it. I think that was the major question that we had as far as insurance goes at this point. Do you have any general questions for everybody?
No. I think now we're kind of out of the general question phase.
Yeah.
Yeah, we're very
now they get hard.
Yeah.
What's up, Jonathan? What's up, Robby? Y'all been hearing me.
They're closing. They're closing in what, like 9 days or something?
Yeah, a week from Friday.
Wow.
I mean, no, remind us. But
I actually have a question for y'all, believe it or not, because, we've been doing this. I think you might have been on one of our early calls, like 7 weeks ago or 8 weeks ago. So I had been wanting to soon invite, people like yourself who've been in the process of buying and selling during this entire pandemic, and get their perspective and hopefully, you know, share any kind words you have about the team that's been helping you, because I think it's helpful. You know, people are just, every day I talk with people that just don't know what's going on in the real estate world at all, specifically in Atlanta, and they live here and they either own a home or they don't own a home, whatever. They're asking me questions that are things that we're going over every week. So I thought if you want to share a few words of anything that's been helpful for you, or how this process has gone, if you were hesitant as well in the beginning, and hopefully if you felt better throughout it. But I don't want to put words in your mouth. I just want to know about your experience a little bit, if you don't mind sharing.
Yeah, so I can start. I think, you know, just initially, we had always planned on 2020 being the year that we wanted to buy or purchase, and I think we were still on the fence. I mean, as you guys all know, and particularly Robby knows about, we were pretty generally open in terms of the time frame. But I think that for me personally, at least, I won't speak for both of us, but kind of, I think these Zoom calls were super helpful because, like you said, we had no idea just sort of the scope, what the market looked like, just how quickly houses are turning around, you know, how quickly they're selling. And so I think especially during right when we started this pandemic, this was super helpful to get questions answered where we didn't feel, you know, silly asking them, but also just to get a good realistic view, because I think I even heard the agency I work for, we've got a pretty diverse workforce in terms of age, but a lot of it does lean toward younger. And I've talked to a lot of people that I've worked with that are like, yeah, you know, I'm gonna wait. Definitely think, you know, the pandemic or whatever will affect the market. And I think it's wait. And I'm like, you guys have no idea. And I felt like I was kind of in that situation. So I think you guys, you know, obviously been super helpful, and, you know, super responsive and just being on the ball, and just generally, like, we didn't know, we're like, okay, so we know to buy a house, you have to do some things, but we don't know where to start. And so I think, you know, that's where Jonathan and Robby really came in. I mean, obviously Robby's also been amazing. I know this guy bothers him way more than me, but I think
we're trying to
bother me.
yeah, I think, no, in a good way. I think so. First time home buying, I feel like it could be a little bit like unnerving, but I think just through this whole process, and I mean, even after like we put in an offer and sign a contract, even if we're not on these Zoom calls, like Wednesday and Thursday nights are the nights we rewatch them because it's still helpful.
Good.
We love to hear that. Well, thank you so much. And I mean, I know we've all loved working with you guys, especially Robby and Jonathan, because they've had to talk to you a lot more than I have and other people in the transaction, but we really appreciate it. And we're excited for you to close soon. So I just thought I'd get a few minutes of your perspective to hopefully help other people that do, you know, tune in and watch these later. And we might share your clip with people to give a positive perspective. And again, it's just all, I think so much about education and feeling comfortable, because, you know, you kind of came into it, like you said, we want to buy a house this year, we're ready, we're excited, but we don't have the first clue of like, what do we do? You know, and is this a time, you know, there's so many questions that people have in a regular world, if you will, but like right now is different, you know, so I'm glad that that's been helpful. So yay.
I will say, as a first-time home buyer during a pandemic, you guys rocked it.
Thank you. That's the clip we're just going to put on, you know, we're going to put on over and over again. Yeah. Thank you guys.
No,
awesome.
seriously, you guys have, I will say this, because the one person that I surprisingly keep getting praise from is Jonathan, because we've just been quick about everything. Honestly, you guys have been just as quick. So it feels as though like we kind of have to be quick.
I know. I think our home buying experience might be a little skewed. We're like, yeah, this feels pretty simple.
Yeah.
No,
So,
it's a good team. You're a part of the team, and that's what I mean. Our buyers and our sellers have to be just as hopefully responsive and in it that we are, or else, you know, you don't have the harmony. So anyway, we really appreciate it. So please share with anybody you'd like and bring them on to our Zooms and Facebook. We are on Facebook Live, which is exciting. So I was going to say, if any of you are on the Facebook Live, have any questions, if Robby or Jonathan on your watch parties, I don't see any on mine, but I had a few.
Take a look.
If you want to take a look, we just have a few minutes left. And I know, Rob, we really appreciate you being on here. If you have any other questions, we be happy to answer them. And
I think I'm good.
we're doing these every Wednesday, 5:30, 6:30. We're rotating through different vendors, all kinds of, partners that we work with. Jonathan is the steady one that with us every week because financing is so crucial, and he's been a great asset. But we brought on a lot of different types of vendors that we work with, because a real estate transaction we could go on and on and on. I mean, everybody from a landscaper, to, next week we're gonna have a financial planner. So, I mean, everybody has their hands in a transaction, and if not just the overall picture of buying and selling homes.
Having people that you can trust and knows what they're doing is invaluable.
Absolutely.
Especially for first-time home buyers.
Yeah, there's a lot of moving parts, and everything's just got to come together, and be fine-tuned.
Yeah, absolutely. So again, I thank you all. If you don't have any other questions, we're probably going to wrap it up, and unless anybody else has anything else to say right now.
I have one last question.
Yeah.
Hey, Richard and Ashley, what's for dinner?
Oh yeah.
So,
And what time should we be there?
I made a herb roasted chicken. I got
deliver?
okra I'm getting ready to put on. She didn't know about. I've got cabbage with some bacon, and I got rice. So
Wow.
It smells amazing.
Okay, that's amazing. Is Richard the chef in the family, or do you
He
both?
is absolutely the chef in the family.
we both cook.
I cook, but I have a very short time limit of how long I want to spend in the kitchen. He'll spend hours.
That's awesome. Well, once you get in your new home and you can have a few people over, maybe a 6 feet away, we love to come and taste Richard's food.
Exactly.
I'm not going to invite myself to your house.
Robbie already knows he has an invitation coming, so we just got to get past phase 1.
Good. Well, you can always do a grill and we can be outside, I have
That's
all
also
kinds
true.
of-
Trust me.
All
I'm willing
kinds
to
of
do that too.
ideas.
Backyard is nice.
Backyard.
Robbie can
nice,
tell
yeah.
you have room.
All right. Well, thank you guys again. We really appreciate it. We're going to end our live stream now and our Zoom call, but we hope to see you all soon. And you can also contact us, any of us, at any time through Facebook or email, phone, Zoom, all the ways. We're available. So we hope to see you again next week.